글로벌 금융회사의 아시아 진출 전략 Global Financial Companies Business Strategies in the Asian Market 이라는 주제로 강연해 주시겠습니다. 네, 부탁드립니다. Would you please start?
감사합니다. Thank you. Thank you very much, everybody. I understand I have 20 minutes to go through 300 slides. So I will try to do it very, very quickly, and I hope you catch most of what I'm saying. And I know we have very good translators, so hopefully they'll be able to follow what I say. And the talk is entitled The Future of Emerging Markets. And if you look at emerging markets, you'll find that there are big changes that have taken place. If you just take pictures of different parts of the world, you'll see this. If I can get these slides to move. Oh, there we go. Emerging markets, 1987, when we started the very first Emerging Markets Fund, had those countries shown in orange. We had only about 5 countries in which to invest at that time. Now, we have this. We have this many countries in Africa, Latin America, Asia, Eastern Europe, and so forth. Things have changed dramatically. If you look at Shanghai about 25 years ago, this is what it looked like. If you know the Pudong area, today it looks like this. It's incredible, the changes. If you look at Dubai, UAE, where we have an office, about 25 years ago, it looked like this. Now it looks like this. So we've had incredible changes, and even in China, 25 years ago, I used to go cycling in Beijing. There were no cars. Now, this is what it looks like. Traffic jams all over the place. So we've had incredible changes. Emerging markets performance over the long term has been very, very good. You can see over the 12 years, last 12 years, 7 years have been outperforming about 58% of the time. But in the last 3 years, performance has been very poor against the US and the global markets. Going back 28 years, about 61% of the time, emerging markets outperformed. And again, you can see the last few years have not been good. Now, of course, when you have markets down, confidence suffers. And if you look at the sentiment regarding emerging markets, that is the number of investors that are underweight emerging markets, you can see those orange bars below the line means that people are underweight, which makes me somewhat optimistic about emerging markets, even though, as you can see here, the amount of money going out of emerging markets funds has increased in the last 3 years. Those red bars below the line shows how emerging markets money have been going out. But over the long term, performance has been good, and if you look at the dollar cost averaging results, you can see emerging markets are much, much better than the developed countries and Korea. If you compare emerging markets with Korean market, again, going back to 1987, you would have been better off being in the emerging market spectrum. Now, of course, there are big, significant differences between the different countries. You can see here China and India compared to Russia and the Brazilian market, and there are big, big differences in terms of performance. This is a 5-year period chart. And of course, currencies play a big role. If you look at the currencies of China, the BRIC, China, Russia, India, and Brazil, you can see there are big, big differences in terms of how these currencies have performed. And in emerging markets, over a 5-year period, there have been also very big differences regards the currency against the US dollar. You can see here how much these various currencies have devalued against the US dollar. However, as a result of this, there are significant undervaluations in currencies. We do a price parity comparison of various currencies to see whether a currency is over or undervalued. That red line is the price parity line, and the blue line is the actual exchange rate. And you can see here that the renminbi, the Chinese currency, is about 15% undervalued. The Brazilian currency, The real is about 29% undervalued. The Russian currency is about 7% undervalued. The Thai baht is about 11% undervalued. The Indonesian rupiah is about 12% undervalued according to our calculations. And the Korean won is about 16% undervalued against the US dollar. So when we see those kinds of differences, we can know that using US dollars to buy into some of these markets can be very, very good. If you look at the valuations of emerging markets, you'll see that the price-earnings ratio is lower than the average for emerging markets generally, and the price-to-book value is much lower than what you see in the developed countries. And in emerging markets, we're expecting continued fast growth. GDP growth is expected for this year to be an average of 4.3% for emerging markets versus 2% for the developed countries. And we believe that world exports will continue to be growing in emerging markets as a percent of the total. Now it's representing about 30%, and we expect to go up to 40 or 50% as we move forward. The same thing is true of imports. The percentage share taken by emerging markets is over 30%, and it's going higher, and the same thing as GDP. By the way, many people ask, what kind of weighting should we have in emerging markets? And this is the answer. You should have at least 30% weighting in emerging markets, because that's representing the proportion they have of the market capitalization of the whole world. Here you can see here both market capitalization and GDP. And of course, if you look at foreign reserves, emerging markets have built up incredible amounts of foreign reserves, starting, of course, with China. Much, much greater foreign reserves than the developed countries. Public debt as a percent of GDP in emerging markets is low compared to the developed countries. And if you look at private debt, it has been rising in emerging markets, but as a percent of GDP, it's still much lower than that of the developed countries. Now, the future is very much dependent upon the internet, because what we are seeing is an incredible number of people using the internet around the world. Of the 7 billion people on this planet, 3 billion are using the internet, and it's growing every day. And if you look at the largest users of the internet, you'll see that China now represents 22% of the total world usage, much greater than the US, 10%. Brazil is 4%, Nigeria is 2%, and so forth. So the use in emerging markets has been growing, and most importantly, smartphone sales. And as you know, Samsung is selling a lot of their smartphones in emerging countries. You can see back in 2008, the number of smartphones was about, sales was about 100 million. Now it's over 1 billion a year, and 70% of those sales of smartphones are in emerging countries. With a smartphone, as you know, you have a computer at your fingertips, which is why sales of personal computers are flat, while sales of smartphones are going up very rapidly. And the adoption of new technology is really mind-boggling. If you can look here, telephone, it took about 89 years for 150 million people to be having a telephone. Now you can see Facebook, it took 5 years. And going down further, you can see it just took a few years for people to have some of these other apps. So adoption is very, very rapid. By the way, I know here in Korea you don't have Uber, but I was recently in Latin America. I visited Mexico, Panama, Colombia, Peru, Argentina, Chile, and Brazil, and in every country I used Uber. So you can see that technology has been moving very, very fast. And you can see online spending in China in one day, the Singles Day. I don't know if you're familiar with the Singles Day. 1111. The 11th month, 11th day of each year, you have Alibaba selling on the internet big sales. $14.3 billion in one day compared to the Black Friday, $10.2 billion. So we're seeing an incredible change in the use of the internet. Many people ask me about commodity prices. Will they continue to decline? And if you look at oil, you'll see that the sentiment is very bad. Most investors are underweight oil companies. But if you look at the oil price, you know that we're at a very low point. We're now down to an incredible low point in the price of oil. However, consumption continues to rise. Now, as you can see here, the gap between consumption and production is wide, relatively wide historically, but that consumption number is continuing to go up. And most importantly, supply is expected to go down, because if you look at the rig count, the number of rigs shown here in blue in the US has fallen sharply. Now, production, as shown in those orange bars, has not come down yet, but it will be coming down as those rigs have an impact. And the same thing is true outside the US. Rigs have gone down and production will follow. Now, gasoline prices have not gone down in many countries because of controlled by the governments. The governments want to continue to collect taxes. But as those prices decline, usage will go up. And you know, I was just talking to one of the automobile companies here in Korea, and they were saying that they're increasing their production of SUVs. SUVs use more fuel, more gasoline than regular automobiles. So you're going to see people using more. And gasoline consumption in China is just one example. You can see how it continues to rise. The trend is high. And of course, they got a long way to go. Even though they have lots of traffic jams in China, you can see that China, on a per capita basis, about 100 automobiles per thousand. In the case of the US, it's almost 800 automobiles per thousand people. And China is going to catch up with the US. If we look at China generally, you can see that GDP growth has decelerated, but it continues to be very high relative to the US, more than double growth rate. And foreign reserves, as I mentioned, in China are very, very high. You can see here, much higher than many other countries. And if you look at how the economy in China is changing, you can see that the services are growing very rapidly. Now, services represent the largest part of the economy, and this trend will continue as we go forward. I recently visited Chengdu, one of the secondary cities in China, and the largest building in the world. This is a picture. This is an example of the service economy, where they've built this huge building to house a huge swimming pool, which is more like a lake. You can see those pictures on the screen of those tiny people, figures on the platform, on that white platform. It's an amazing thing to see, with thousands of people enjoying the waves. And of course, they have a whole bunch of restaurants along the coast there. And this is the hotel, Intercontinental Hotel, 700 rooms were fully booked. And Lotte has a big shopping mall in the other part of the building. So you can see how the services are hitting this economy. And of course, hotels are being built in places like Wuhan, where we also visited. And of course, in Nanchang is an example of a mall. You see shopping malls all over China being built. Again, in Nanchang, the Wanda Mall. The property market, a lot of people talk about in China, is actually a lot healthier than you might imagine. The size of these developments is enormous. 30, 40-story buildings, maybe 10, 15, 20 in one go. This is a showroom of one of the projects in Fuzhou we visited. You can see the salesman telling us about the development with all these high-rise buildings. And you can see how well developed it is with all kinds of gardens and well-manicured lawns. And if you look at the growth of wages for migrant workers who are moving into the cities, you'll see that although there are many empty apartments, they eventually will be bought because wages are going up and the affordability will increase. And urbanization is just starting in China. If you look at the US, about 70% of the country is urbanized. In the case of China, only about 50%. And that's changing. More and more people is moving into the cities. Property prices have actually come down slightly, you can see here in China. But if you look at a place like Shanghai, you'll see that property prices have surged upwards and now reaching the highest point. And in Shenzhen, right near Hong Kong, again, property prices have gone through the roof. So when you look at China, you shouldn't consider only the general picture, but also some specifics of what's happening individually. And here you can see the sales of property in China continue to be very, very high. Infrastructure. I visited 5 cities using these high-speed railways. And of course, traffic jams are enormous in China now, and they need more rail transport. Crowded trains means more infrastructure spending needed. And if you look at the number of subways in these cities, it's very, very small. Here in Seoul, you have a real network of subways, but in China, you don't see that. And you can see the comparison here, railway density of the major cities of the world compared to cities in China. China is really behind. So they're building these huge stations like this one here in Nanning for the high-speed rail. And this is another one in Wuhan we visited. And in Shenzhen, you can see me with my luggage there. And in Guiyang, where we went to take the train, the high-speed train, and in Fuzhou. So they really have done a lot. And these high-speed trains are wonderful, 150 to 200 kilometers an hour from one city to the next. And Changsha, when we boarded, we took this train, and you could see me here. Train, notice, is pretty populated. Most of those trains were full of people. And the Chinese are expecting to expand their network all the way to Europe. You can see here the Silk Road economic belt, and also they're building a string of large container ports extending through ports all the way to the Middle East. Stock market in China has been pretty volatile, as you can see here. Chinese investors have had a real roller coaster ride, and now it's down and probably a good chance to get in. Looking at the long-term view, if we start in 1988, when the first emerging markets index was formulated, to now, those yellow bars show the bear markets, when the markets went down by more than 30%. And you can see those bars are very narrow. The bear markets do not last very long. The white areas are the bull markets. You can see they last longer. And if you summarize that, you can see that bull markets increased during that period an average of 356%, lasted an average of 69 months, while the bear markets went down an average of 57% and lasted an average of 14 months. When people ask you, when is the best time to invest? What should be your answer? The best time to invest is when you have money. Because nobody knows when there's going to be a bull or bear market. But we do know that bull markets last longer than bear markets, and bull markets go up more than bear markets go down. So best thing is to dollar cost average, put a certain amount, fixed amount in every month, and you should do fairly well over the years. And you can see emerging markets, we believe, the trend is definitely our friend in the sense they will continue to rise. So I certainly appreciate your attention. We have a blog and Twitter if you're willing and able to go into the internet and look at what we're doing. Be sure to come in on this. And I'm right on time. I have exactly 34, 33, 32 seconds left. Thank you very much.
네, 마크모비우스 회장님 훌륭한 강연 감사드립니다.